Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, we are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, morning folks. So Tuesday, all set for trade, and it's in general. I don't want to jinx it, but the world is looking like a slightly better place. At least the headlines, whether it's geopolitical or whether it's tariffs, they're not as sharp as what we saw in the earlier part of this month. And April is just about winding down.
Well, that's right. And from all those debates, it's now turned to memes, right? There's a bill that was passed overnight banning the Congress from trading. And you know what it's called? What Act? Pelosi Act. That was
Pelosi, Nancy Pelosi.
That was passed last night. So from all those debates, suddenly you have memes taking center stage. Interesting times.
And guys, that knock, I only caught it this morning. I didn't watch it last night. The Vaibhav Suryavanshi,
I saw a glimpse
100
of
knock.
it.
I mean, just incredible.
I saw every ball of it. It was absolutely spectacular. I didn't get a chance to see Sachin when he was that young.
Yeah.
But this was something else. When you bring up your century at all of 14 years old, and you bring it up with a 6. I mean, what was he thinking?
He was
Brilliant.
knocking all these bowlers as if it's like normal gully cricket or something. He's playing with his friends, just hitting it out.
I have a 14-year-old, so I told her this morning. I said, "Well, look at look at what other 14-year-olds are doing." So
that's not fair.
She turned right around and said, "Well, what were you doing?"
I woke up my 6-year-old telling him that what happened last night, and he popped up. Brilliant. Just look at him.
Absolutely. I mean, incredible pictures. And Sachin Tendulkar, by the way, congratulating him on X and Vaibhav replying, and that's a great thing about him. Of course, IPL, fantastic, but of course also these interactions on Twitter, X, whatever you want to call it.
Rahul Dravid's reaction as well. He was in.
To get Rahul Dravid up on his feet.
Absolutely.
And, the stoic Dravid
static.
coming up and really cheering. Quite something.
And just one more point. Both these two gentlemen, Jaiswal as well as Suryavanshi, they were batting out there. They brought up, 150 runs or thereabouts. Yeah. And the combined age between the two of them was what? 37 years. 37 years, that was the future of it.
22 or something?
23 is Jaiswal and 14. So put it together, you have 37 years. Future of India in cricket, I hope. Amazing.
Absolutely. And I think that's a great thing about the IPL format as well, right?
Yeah.
It kind of shines a spotlight in a really intense way on performers like Vaibhav. Well, let's just sort of, get back to the market quick bit and take a look at take it from the top, really. So it was nothing kind of a day, right? US equities spared intraday losses to close absolutely flat. Nothing really on it, on market prices at least. S&P flat, NASDAQ down. I mean, nothing. The 10-year was down about 3 basis points, $4.2 index back to about 99. It gave up some of what it had accumulated last 2 days. Oil prices 2% lower, 65.60 or so is where Brent left off at. Now, Treasury Secretary Bessent gave an interview to CNBC, the CNBC network, and he basically spoke about two countries, one India, one China, starkly very different sort of comments which he made. We'll just quickly play out those sound bites and we'll discuss this.
The negotiations with our Asian trading partners are going very well. Vice President Vance was in India last week, talked about substantial progress. I would guess that India would be one of the first trade deals we would sign, so watch this space. In terms of trade negotiations, we'll see where this goes. But as I've repeatedly said, that I believe that it's up to China to de-escalate because they sell 5 times more to us than we sell to them. And so these 125, 145% tariffs are unsustainable.
The fact about India being first in the line to get a trade deal is not new. I mean, it's been it's widely acknowledged that Japan, India, perhaps first in line to get a trade deal. But coming from the Treasury Secretary, important to note. And remember, when we say a trade deal, what we're essentially talking about is just a framework kind of a deal. As someone put it, a MOU. And because trade deals, I mean, the actual bulk of it takes a long time, months, years, etc. So, but anyway, for what it's this is important nevertheless. And of course, the more important thing in that sense was with regards to China. Besant saying that it's up to Chinese to come up and make that first call and initiate conversations, etc., etc. And of course, as we said yesterday as well, markets globally are still waiting and watching whether those stocks are happening, not happening, and so on and so forth. Well, other stuff, Nvidia was down 2%. The Wall Street Journal essentially saying that China's Huawei is developing a new AI chip that it hopes could replace some of Nvidia's higher-end products. Remember, there are now restrictions on Nvidia being able to sell these chips to China. With regards to India, Pakistan, tension still high, lots of debate, fire, fury. And of course, I mean, at the LOC, there is some firing, some updates we get from our forces early in the morning in terms of what happened the previous night. So Pakistan's defense minister told Reuters yesterday that they've reinforced their forces, anticipating an attack. The big focus in the US this week is the Magnificent Seven earnings. On tomorrow you have Microsoft and Meta. Thursday you have Apple and Amazon, which will report numbers. So that's a big one. Yesterday, of course, was really a flourish of a day. The market wiping out all of Friday's losses, and we basically ended almost at the day's highest point. So we are essentially back to that same framework we were working with, at least on the upside. The upside level is 24,546. It's a 61.8% retracement of the entire fall from the highs late last year to the lows that we saw in April. Supports come in at 23,847, which is nothing but the recent low. Bank Nifty upside is the same range, 56,098 to 56,631. And the downside level is Friday's low, which was 54,176, should act as a bit of a support in case the market starts to turn a little bit. GIFT Nifty will come up on your screen. We'll give you a quick sense of where we are likely to start this morning. 40 points in the green. Surabhi.
Absolutely. I mean, Scott Besant making all the headlines yesterday because the markets were not doing too much. In fact, he spoke about India, China. He also did indicate that there are other deals coming with 15 to 17 other trading partners. And I mean, that's giving a lot of people hope. The South Korean delegation was in Washington in the over last week. So there is an anticipation that eventually these deals will get signed. Let's listen in to Mr. Besant and then we'll move on.
There are 15 to 18 important trading relationships. As you said earlier, we'll put China to the side. That's a more complex negotiation. And with the other 17, especially with the other Asian countries, we've had many countries come forward and present some very good proposals, and we're evaluating those.
Okay, so I mean, the world is filled with hope that eventually this gets sorted out, and at least it's not going to be as onerous as what was announced on the 2nd of April. Asia this morning is actually looking rather good, and markets are building up on that momentum. It was a flat start for markets like Japan, but now Japan itself is up about 0.4%. The Hong Kong market has really taken off. As you can see, they're almost 1% higher. Taiwan's looking better. At the start, the Shanghai Composite was slightly lower. Even that's turned positive. The Kospi is up about 0.7% as well. So Asia has actually got a good thing going for itself. Of course, these earnings that we're talking about, the Magnificent Seven earnings, they will set the tone between today and tomorrow. Today, it's Meta and Microsoft. On Wednesday, it's Meta and Microsoft. And on Thursday, it's Apple and Amazon. So there's a bit of a wait and watch ahead of that as well. By the way, on all of this talk between US and China, the Chinese Foreign Ministry again issued a denial yesterday. And this is a statement from the spokesperson saying that, let me make it very clear that China and US are not engaged in any consultation or negotiation on tariffs. So it seems the US side is trying to woo the Chinese a bit into the conversations. China is saying lower tariffs, then we'll talk. So that's a bit of a stalemate. But anyhow, now let's talk about our market, because yesterday was once again a very good day. And in the last 6 or 7 sessions, about 6 sessions actually, this is the trading range for the market. The lower end of this band is 23,850. And last 4 days in a row, we're testing the upper end of the range, 24,360. 4 days. And typically when you test a level again and again and again, chances are that it breaks. That's what technical experts would tell you. So let's see if we get that upside break or not, given the tailwinds. The Asian tailwinds are very, very positive. Institutional flows, no problem at all. DIIs, FIIs, both on the buy side. Almost 2,500 crores from the FIIs and 2,800 odd crores from the DIIs coming through yesterday. So flows are very strong in the market. The macros are also kind of supporting. Quickly on the IIP, the March IIP number is looking better than the Feb IIP number, 3%. Manufacturing still kind of ambling along. That's the bit of a problem in the puzzle, 3%. Still better than the February number. Consumer durable output, all the AC sales, that's really surged, about 6.6%. Mining is at a 6-month low. Capital goods at 2.4% at a 7-month low. So the industrial part of it is the problem. Consumer durables have done quite a bit of the heavy lifting this time around. Very quickly, coming into some stocks and specific news flow here. Bajaj Finance today, we don't only get the earnings. Today, the board will also decide on the stock split, which got the stock quite excited when it was originally announced. So watch out for this. And IndusInd Bank, we told you earlier, and it's now happening. Ritu had kind of given a hint that more heads will roll, more exits will happen, and that's exactly what got announced. Arun Khurana has resigned as the whole-time director and deputy CEO. And this is effective immediately. So he's no longer with the bank. Very quickly, earnings, and it's a big list today. Trent, Bajaj Finance, like I said, Finserv as well, Ambuja, BPCL, a couple of very interesting non-nifty names like CEAT, Star Health, Vishal Megamart, among others. So plenty to keep us busy. Nigel.
Well, that's right. Besides the flows being quite positive, the overnight cues as well, we look at the Troika, they as well behave. Your Brent crude price is more or less stable. The dollar index has come in lower, and the 10-year yield as well has cooled off to around 4.21% or thereabouts. So all those three well behaved. What did the FIs do in the F&O market? Well, in yesterday's trading session, they added some longs, they covered some shorts. They continue to remain net short with 58% of their positions on the short side. And if you look at it in absolute terms, you have both the FIs as well as the clients. They are marginally net short, and the client net short positions at around this 27,000 odd. It's the highest we've seen all the way since early October. So this net short position is at a more than a 6-month high is what we're seeing from the clients. The FIs as well, actually their short positions are relatively lower in comparison to what we've seen in the last few months. Moving to the Nifty Bank. Now, yesterday I had mentioned that if the Nifty needs to end higher, the Nifty Bank holds the key. And what was encouraging about yesterday's trading session from the Nifty Bank was it made a higher high in yesterday's trading session. Otherwise, you were seeing that, we were having a bit of a slippy slide. But yesterday, it made a higher high. And even on the low side, well, it made a higher low as well. So a higher low coming in from the Nifty Bank, that's normally a good sign. But now it's got its work cut out because the crucial resistance level comes in at around the 56,000 odd mark. Last week, twice we visited that mark, we couldn't conquer it. So in today's trading session or even tomorrow, you'll want the Nifty Bank to go ahead and conquer this crucial 56,000 odd mark. Remember, valuations are relatively okay in the banking space. And also you have the flows that are coming in. And normally the banks, they take a larger chunk of that. So that 56,000 mark, that's the line in the sand. Moving to the options data that we're looking at on the Nifty, the 24,500 call, fairly active, 24,000 put. And we're in this broad range. On the downside, 23,800. On the upside, 24,500. So that's the important marker that you're looking at. The crucial resistance comes in at around this 24,550 because as we mentioned earlier, it's a 61% retracement of the entire fall that we've seen. So that's the crucial resistance mark for the Nifty itself. The stock that I'm tracking for today's trading session is Coforge. And there are a few reasons out there because overnight we had Sabri Corp. They have gone ahead and they've sold their hospitality solutions business. Why is it important for Coforge? Because they had signed a collaboration last month or so for more than $1 billion deal over the next few years. And the street was cautious that Sabri, maybe their debt is too high. But now they appear to be, working on that so that it gets a bit of a clearance with regard to visibility of that deal. So that's a positive. The company has announced a small sale with regard to one of their subsidiaries. And early next week, we'll be getting the results as well. So Coforge is a stock that I'll be keeping an eye out on.
Okay, all right, got it. Nigel, thank you very much for that. So that's, of course, all the cues that we have to track. We have Mark Matthew of Bank Julius Baer & Co. joining in for some perspective now. Mark, great to have you on as always. Good morning. Thanks for joining in. So let's start right there. This whole hope that we're seeing across Asian markets because of what Mr. Scott Bessent is saying. He's saying a deal with India is probably first off the block and there could be others. But China is puzzling. The US says we're talking. China reiterates again and again through its official channels that there's no conversation. What do you make of it?
I make that both of those are really for domestic politics. I mean, Scott Bessent was saying yesterday that China has to make the first move, and China says that there are no talks and the U.S. has to make the first move. It's for domestic politics. But behind the scenes, there's no doubt that they are talking. And at a certain point, though, we're going to have to see some evidence of that because it's the reason why the market has been going up primarily is the narrative has changed from escalation to de-escalation. At a certain point, we're going to need to see some evidence of that. But I think we will because it just makes no sense for either economy to basically, drive themselves off a cliff, which is what they would do if they keep these tariffs in place.
Hi, Mark. Good morning and good to see you. What about the Indian markets? We have outperformed from Liberation Day, because our markets are high in comparison to the rest of the globe. And the flows have come back as well. But we have our challenges, right? There is a bit of a slowdown in various parts of the economy. We also have earnings that haven't been, blockbuster. And maybe there is a downgrade risk as well to the estimates that we're working with. Your view on the Indian markets post this recent rally?
I think it's fine. I think the market is always looking forward. So it's true that there has been some economic weakness, but if we look forward, I think we will see acceleration because the things that caused that weakness last year are behind us and inflation is back down to very reasonable levels. So we can look forward to at least 2 more rate cuts. And the main thing is that the dollar is still overvalued. And our view is it will weaken over the next 12 months. It's probably about 10 to 15% overvalued, believe it or not, based on our real effective exchange rate model. Now, I don't know if it's going to go down another 10% because it already is down 10%. But if it continues to weaken, of course, that is good news for the Indian market as well, because it would attract foreign flows.
Although 15%, and I've seen some estimates, Mark, morning, 15, 20, 25% downside on the dollar. But that would only come if there's this sharp weakness in US, right? US growth, maybe a recession. Wouldn't it take a recession to trigger another 15% downside in the dollar? What would that mean then for flows, etc., to EMs?
It could be positive. I mean, there are 2 kinds of recessions. There's a very deep structural recession like the global financial crisis, and then it's just risk off everywhere. But then there's a good old-fashioned cyclical recession, and generally what you see in that kind of environment is people trying to find other places to invest in the rest of the world. And India's economy among the major emerging markets is about as decoupled from the US as you can get. I mean, there is the technology sector, but that is not the main driver of the economy. It's domestic consumption. So I think in a cyclical recession scenario, by the way, it's not our forecast, but if it did happen, that would probably be a net positive in terms of flows to India.
All right, Mark, we'll leave it there. We'll, of course, you don't need a serious kind, as you said, right? I mean, because then that is just bad. But some slowdown typically, good for EM flows. So just the right kind of slowdown is what is required to trigger that sort of, higher flows into EMs, etc. Mark, thank you for joining us. As I said, appreciate it. Well, I think let me just quickly run you through the interactions which are lined up here over the next 2 hours or so. So we have Pralay Mondal of CSB Bank who will be with us to talk about their 4th quarter numbers. 9 o'clock, we'll have the management of Indian Railway Finance Corporation, IRFC, to decode their 4th quarter numbers. 9:20, Ajay Argal of Franklin Templeton will be a market master. 9:30, you'll have the management of AWL Agri business joining us to talk about their numbers. Hexaware will be joining us at 9:40. Then there's KPIT Tech at 9:50. And towards the end of the program, it's the economy with Lata, and she'll be speaking with the MPC member, Saugata Bhattacharya, on the state of the economy. Stay tuned.
Well, time to slip into a short break. You've got a lot of stock-specific action track for you. We get to that in just a bit in our special Top 10 segment. For the time being, we give you a sneak peek. Ultratech Cement, TVS Motors, Hexaware. We have Adani Green, PNB Housing Finance, and Firstsource Solutions. All of them will be reacting to positive news flow. On the flip side, Adani Total Gas, KPIT Tech, Nippon AMC, and Tata Technologies will be reacting to negative news flow. Take that break, come back, we'll get into further detail on all of these names.
Welcome back. As we've been telling you, the cues across Asia are actually quite positive. Big shade of green across most markets, and Hong Kong is leading that charge. About 0.7%. I was actually up 1%, so it's cooled off just a little bit, but looking good. And the implied open is suggesting that we'll probably start northwards. It's an important day. Will we break out of our 5-day, 6-day trading range or not? With this kind of a gap up, in all likelihood, yes, 24,500 on the GIFT Nifty. So let's see. Lots of stocks to talk as well, to track and talk as well. Let's straight away get to our team then, with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Nigel, let's start off with Ultratech. How did it look?
Well, Ultratech's numbers came late in trade yesterday. And in fact, from the lows of the day, actually, the stock did end a little bit higher because at one point of time, it was down close to 2%. They had their con call post-market that was delayed by close to an hour or so. But the con call details ain't very, very worrying. Near term, they've indicated there could be some pain. Let's run you through all the top, highlights that we got out there. They're expecting the industry to grow by around 7 to around 8% in the coming year. For Ultratech specifically, they're talking about double-digit organic volume growth. So X of the acquisition, still they'll grow in double digits, which indicates that they'll gain market share yet again. On the cost-saving front, they've done plenty, right? They've been focusing on the WHRS system, on renewable energy as well. And they've achieved close to around 86 rupees per ton of cost savings. But they're saying in the next couple of years, it moves to around 300 rupees per ton on the cost savings aspect. That's by FY27. So that's a positive. Pricing, it's better today in comparison to the average of the last quarter, so you like that. And they are targeting a capex spend of around 9,000 crores in FY26, but they're saying FY27 will be relatively low because in 26 they want to turn around some of these assets. The net debt to the net debt to EBITDA is at around 1.5, but they're saying gradually they'll bring it down to around 0.5, which is the level they are comfortable on. And, they're the magicians with regard to turning around assets. On India Cement as well as Kesoram, the commentary was positive out there. On India Cements, they're talking about, EBITDA of around 500 to 800 rupees per ton. That compares with 40 rupees in the past quarter. And also for Kesoram, they're talking about 1,000 rupees or thereabouts, which in the past quarter was around 400 rupees. So they're turning around those assets well as well, going with green on Ultratech Cement. But the other number that came in very close to end of trade was TVS Motors. And first look, actually, the numbers look quite good. However, it had a PLI one-off in there. Sudarshan joins us to run us through the con call takeaways and how he expects the stock to react. Morning, Sudarshan.
Morning, Nigel. So as you have said, by the first look, numbers look much better than estimates. Margin had come in at 14% against our estimate of 13%, but there was one-off, and because it was due to PLI benefits that company has factored in for entire year. Now, if you exclude that, margin was at 12.5%. That was largely in line with estimates. I'm going with green mainly because of 3 reasons. First, earnings were largely in line. Second, about the global market, company is saying that Africa has hit the bottom, and from here, it's only likely to grow. And third is that they are saying that domestic growth in FY26 is likely to be the same as the industry saw in FY25. Why it's positive for TVS? Because it's one of the companies which has outperformed all the other companies. 2 companies that have outperformed were Eicher Motors and TVS. So if FY26 remains the same, so it can be one of the outperformers. One thing which can be seen as a negative is companies say that Q1 can see some moderation. Why? Because last April there was a base effect, but companies say that May and June can be good because of marriage season. So overall, it's a mixed quarter, but I'm going with green because of the commentary related to global market as well as FY26 outlook.
All right, thank you very much for that. Well, Hexaware Technologies is the next one we're going to focus on. Reema is here with details. Reema, morning.
Hi, morning. So Q1 calendar year 25 for Hexaware was steady. The company reported a dollar revenue decline of 0.2%. Margins, according to the company's calculation, came in at 16.7%, an improvement of about 40 basis points quarter on quarter. Adjusted margins, because they adjusted for ESOPs, etc., is at 17.1%. No annual guidance, but they have given a color of how they expect the quarters to pan out. So first, on Q2, they expect to deliver reasonable but not sharp growth. So this is positive because in Q1, there was a revenue decline. So they are expecting growth, reasonable growth in Q2. For Q3, they expect accelerated growth. And then Q4, they expect to buck back to the usual pattern and grow in Q4. So Q3, Q4 will be growth quarters, and these are not contingent on the macros. EBITDA margin guidance stands at 17.1 to 17.4%. And this again is the company's adjusted margin guidance. And to put it in context, in Q1, margins were at 17.1%. So 17.1 to 17.4% for the full year. Back to you.
Okay. All right, Rima, got it. Thank you very much for that. In fact, the management of Hexaware will be joining in to talk about their quarterly earnings and the outlook at around 9:40 a.m. So stay tuned for that. Okay, more stocks. Adani Green and Adani Total Gas. Let's see how the numbers were over here. Back to Sudarshan for it. Sud.
I'm going with green for Adani Green and red for Adani Total. For Adani Green, it was a healthy set of earnings led by power supply segment, and total revenue has increased by 8%. EBITDA was up 11%, and even margin has increased almost 300 basis points if you compare with the same quarter last year. And from power supply, revenue has seen an increase of 37%. Also, company has seen an increase in profit despite the despite an increase that company has reported in one-time loss. For this quarter, one-time loss was of rupees 166 crore against the 80 crore that company had reported same quarter last year. Also, power purchase agreement-based electricity generation was at 107% of company's target that it had given for FY25. Coming to Adani Total, it was a subdued set of earnings. Revenue was flat. EBITDA has seen a just increase of 1%. Margin has slipped more than 50 basis points. Even volumes were up just 2%, and it has come at 263 MMSCM. And the reason of subdued set of earnings because of the APM gas allocation cut that the entire industry had seen. For Q4, APM allocation for company was at 49%.
Okay, all right, sir. Thanks a lot for that. Well, let's hop across to Upasana. She's here to tell us about KPIT Tech as well as Nippon AMC. Morning, Upasana.
Good morning. First up, let me start with KPIT Tech. It was a miss across the board. The good performance in the international business of the company failed to offset the weak domestic mutual fund and issuer solution business. Now, other expenses also saw a sharp uptick of 6% sequentially, putting up pressure on companies' EBITDA margins, which were down nearly about 180 basis points sequentially. Now, coming to the numbers now, revenue stood at 282 crore with a downtick of 3% sequentially, and EBITDA stood at 122 crore, down about 6%. EBITDA margin stood at 43.2%. with a downtick of nearly about 180 basis points as mentioned earlier, and net profit also saw a downtick of 6% sequentially. So all in all, across the board, the weakness continues. Now coming to Nippon Life AMC, the revenue was in line with analyst estimates. Net profit was also higher than analyst estimates. This was mainly due to 50% rise in companies' other income and lower tax rate. But when we talk about the key matrices of the company, that is the quarterly average AUM, that was down, and company lost its market share as well. Coming to the numbers, revenue saw a downtick of 4%. Revenue yields were also pressured, down about 60 basis points at 40.7. Operating margin of the company also under pressure, 115 basis points down at 64.5%, and net profit was nearly flat at 1% at 298 crores. So now talking about the quarterly average AUM, it was down about 2.2%. SIP AUM of the company was also down as high 7% sequentially. And company's average AUM market share was down 5 basis points overall. And if we talk about specifically equity market share, it was down 13 basis points sequentially. So all in all, going with red for both these stocks.
All right, Upasana, thank you very much for that. PNB Housing Finance is the next one we want to focus on. Abhishek has got details on this one. Abhishek, morning.
Well, this result was a fabulous one. Take a look. Net interest margin is at 6-quarter high of 3.75% versus 3.7% in the previous quarter. The spreads were at 2.19% when compared to 2.29% in the previous quarter. Asset quality, one of the best gross NPA ratio that you are seeing in last 22 quarters, coming in at 1.08% versus 1.19% in the previous quarter. Disbursements were robust over here, 23.7% growth YOY and about 27.5% on a sequential basis. So disbursal to AUM ratio, that's also improved to about close to 52% versus 39% in the previous quarter, and that helped the AUM growth. AUM growth was at 12.85% YOY and about 4.6% sequentially. YOY, it's the highest growth that you are seeing in last 21 quarters. So expect the stock to be in green today. Back to you.
Okay. All right, Abhishek, got it. Thank you so much for that. On to Rima again. Rima, first source. How are the numbers?
It's actually a pretty good quarter for First Source. I'm going to go with green. For starters, in Q4, there was growth, 2.1%. Margins maintained at 11.2%. And not just that, the company is given a guidance for FY26, which in itself is positive, and the guidance, according to analysts, is very healthy, 12 to 15% in constant currency terms. Though it does include about a 3% benefit of the acquisition, margins stood at 12.25 to 12%. Also, the company said that in Q4, their dollar revenue run rate quarterly hit $250 million, 4 quarters ahead of guidance. So Q4 was strong. FY26 guidance at 12 to 15% is healthy. So it's a good quarter by First Source.
All right, Rima, thanks a lot for that. A good quarter coming in from there. But some pressure on Tata Tech is what you're expecting today?
Yes, so expect a block deal today. TPG is planning to sell about 15 million or 3.9% of its equity in Tata Tech. This will happen at a price of 670 to 695, which is a maximum discount of 5% on where the stock closed. TPG had sold even last year. They're again doing a block deal as of March. Their stake was 6%, and they want to sell another 3.9% today. Back to you.
Okay.
All right, Rima, thanks a lot for that. Let's do a quick recap of all the top stocks we laid down for you, the ones with positive news flow. Ultratech, TVS Motor, Hexaware, you have Adani Green, PNB Housing Finance, and First Source. While the stocks reacting to negative news flow include Adani Total Gas, KPIT Tech, you have Nippon AMC, and Tata Technologies.
All right, well, that's a list of stocks that are going to be on our focus. Now, IndusInd Bank has announced that its deputy CEO, Arun Khurana, has resigned with immediate effect weeks after the lender disclosed accounting lapses in its derivatives portfolio. Ritu's she gave us a heads up, and now we have the news. Ritu, give us the details here.
Well, thanks for that, Prashant. And what is clearly a fallout of the accounting discrepancies in IndusInd Bank's derivative portfolio, you now have the Deputy CEO, Arun Khurana, resigning with immediate effect as of yesterday. We had reported this a couple of weeks ago, where Khurana was overseeing the Treasury Front Office, which is the division responsible for the derivatives portfolio, where this incorrect accounting led to a near 2,000 crore hit on the bank's P&L. And in his resignation letter as well, Arun Khurana has cited these recent unfortunate developments that he calls linked to the discrepancies and P&L hit as the reason for the decision. Now, the resignation comes just a day after the bank disclosed that an independent investigation had identified key individuals who were held responsible for the discrepancies, and the bank had then said that the board will determine changes and realign the senior management responsibilities based on the report's findings. Now, we understand, of course, this independent investigation was conducted by Grant Thornton, which has pegged the adverse financial impact at about 1960 crore rupees, very close to the 1979 crore rupee hit that was determined by the external auditor, PwC, which the bank will now account in its fourth quarter earnings, which is due in a couple of weeks. Arun Khurana's exit is only the second major departure from the bank in recent months, after the CFO had resigned in January, even before the discrepancies were disclosed. And meanwhile, as we've been reporting, RBI has cut short the current CEO's tenure to March next year and asked the board to submit potential candidates by October.
All right, Ritu, thank you very much for that. So that's IndusInd in focus. I mean, lots of news flow over the last many months now, culminating into this. 830 is where IndusInd now finally left off yesterday. Let's talk about commodities and what's the action there. Manisha is here with what's top of mind. Manisha, good morning.
Morning, and thank you for that, Prashant. I'll start with the gold prices, which seems to be reversing some losses. Yesterday, we saw prices fall below $3,300 an ounce. We're trading around $3,320 or 30 thereabouts. The cautious sentiment is on ahead of the U.S. economic data. Remember, today you have the U.S. consumer confidence numbers coming in, and tomorrow employment data, first quarter GDP numbers, home sales, and also Bank of Japan monetary policy meeting. So ahead of that, you have seen gold prices gain up slightly. What hasn't done well has been the crude oil prices, down 2% overnight. Remember, OPEC is going to increase production for the month of May and June as well, and the U.S. output is near records as well. Discounted barrels from Iran and Russia have continued to add to Asia inventories, and that has taken crude oil prices in the negative on a month-on-month basis and for this year as well.
Okay, all right, got it, Manisha. Thank you very much for that. So that's a roundup of all the key stocks plus the commodity headlines. Take a break, come back on the other side. We'll have Avnish Agrawal of PL Capital joining in for some fundamental stock talk.
Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Well, we've listed down all the top stocks that you need to track, but let's get a little bit more fundamental analysis going. We have Amnish Agarwal, the Director Institutional at Prabhudas Lilladher, who joins us, PL Capital, who joins us. Hi, Amnish. Thanks a lot for joining in. Amnish, I wanted to ask you about a couple of companies that came in with their results towards the end of trade. One is UltraTech Cement, the other one is TVS Motors. Your reading of those numbers, for UltraTech, everything was pretty much okay. Barring in the near term, they're talking about some pain, and that's because of the intense heat. Otherwise, things were okay. And on TVS Motors, the stock saw a sharp spike. But, post-market hours, we got to understand that, in fact, there is a one-off in terms of the PLI that was accounted for. Your take on both these two?
Yeah. Hi, Nigel.
Hi.
You see, if you look at, say, UltraTech, you see, these are weather-related conditions. They are, I think, all temporary, and we had very intense heat waves even last year. And the main thing here is that they are looking at expanding their margins over the next couple of years in some of the recent acquisitions, and they are banking a lot on the operational efficiencies which might come from renewable and other sectors. So UltraTech, I think the numbers look reasonably good. Is there a very big upside in the near term? The answer is no. But UltraTech remains one of the best stock, or rather the best stock it's like a portfolio stock in the cement space. If you want to, you can say, play the India, you can say the entire infra story, the entire, you can say the housing story and all. UltraTech is more like a portfolio stock, maximum capacity, most efficient player. So from that angle, the company continues to look reasonably good. Now, when it comes to your TVS Motors, you see TVS Motors, I think in the entire two-wheeler space, one of the larger companies, it is growing best in terms of volume. This quarter, there was a PLI gain due to which there was a prop-up in terms of margins. But now if you look at the numbers, the stock currently is also trading at something like 27, 28 times on FY27 earnings. So that has been an issue with TVS Motors, that despite it being, you can say, the company growing at the fastest pace, and in terms of EV penetration also, or the share gain also, it is doing well. It is on, I think the issue is only with regards to valuation. Otherwise, in terms of pure volumes, product launches, and other factors, I think TVS continues to be a very decent player.
Okay. Got that. Amnish, hi, morning. Just want to discuss some of these mid-cap tech earnings that have come. First source, there's some growth there. I think 2% constant currency top-line growth. But Hexaware seems to have faltered. What are you liking in mid-cap tech? Of course, Persistent was, I think till now, Persistent has been best in class in terms of tier 2 technology, growth intact. But what do you like, if anything?
You see, tech as a space is not doing well. Although you can say the TCVs of many companies, they are not showing any big issue. But the conversion is not happening at the current juncture. Whether it is, you can say, larger companies, or whether you look at the smaller companies, I don't see a probability of any acceleration in the growth rates happening over the next 3 to 6 months at least, till the time this entire uncertainty around the tariffs goes first. And secondly, even in terms of, say, you look at Europe and all this, so they have been reeling under some sort of a recession from quite some time. So I think Persistent is a stock actually which has been doing well. And this is I would say, in the mid-cap space, this seems to be the best placed company. But having said that, if you look at the valuations of Persistent, they are, I would say, they are cut above the rest. So even the larger stocks where they are trading at, say, something like today, anywhere between 18 to 20, 21 times, Persistent is trading at a significant premium. But as such, I think at this point of time, it is more, you can say, the short covering and all. But otherwise, I think tech is a space which will show pressure on numbers even for the coming 1 or 2 quarters.
One more word since you're talking about tech. What about Coforge? That's Sabre. That is the global listed company. It was up 15% overnight because they're looking at, deleveraging their balance sheet. And the fear was that, their balance sheet wasn't in good order. That's why when they did a collaboration with Coforge for around $1.5 billion, the street was a little bit skeptical. Now, if their balance sheet is in better shape, this could be a bit of a fillip for Coforge, though it's not, in fact, very, very cheap. Your view on the stock, because you have that news flow, then you have them selling some stake in one of their subsidiaries, and you have their results early next week. Your take?
Coforge, I would say it's an exception, and the stock was actually languishing at a low level. But now, if you can say if there is some deleveraging happening in one of the companies, which is you can say related to them. And I think that news flow around Coforge is likely to be on the positive side. And it all will depend upon what they actually, you can say, declare in their numbers in terms of, say, your orders or in terms of the outlook. But the news flow around Coforge has been, I would say, reasonably positive, and that is one reason the stock has also shown a significant uptick in line with some of the other stocks.
Okay. All right. Amnish, got it. Thank you for some of those inputs. We do have to now touch base with our first management on the show this morning. CSB Bank is on our radar. The bank reported a mixed set of numbers for the fourth quarter. Profit after tax came in healthy, but net interest margin has slipped. To talk about this and the outlook ahead, we have Mr. Pralay Mondal, MD and CEO at CSB Bank, joining in. Mr. Mondal, good morning. Thank you very much for being with us. I think I'm just going to cut to the chase and get to the heart of it, because these days the market does get jittery whenever there is any increase in credit cost or, anything where there is a miss. It's the market mood. Let's actually start with this decline in the net interest margin. You are at, I think, 3.75% versus 5% last year, and even quarter on quarter, I mean, you were above 4%. Why this dip? Is it temporary? Do you hope to reverse it this quarter?
Good morning, Shurvi, and good morning to all your viewers. Yes, you're right that we had a slight dip this quarter in our NIM. It went to 3.75. The guidance had been we will be between 4 to 4.3. That had been where we have been talking about. But this quarter, we had three specific issues. One is obviously because of the huge liquidity issue which was there for almost half the quarter or more than that. We as a bank who is still building the liability franchise, so we took a lot of funding structures because we wanted to grow fast. And I have always said that we will prefer growth over margins. And from that perspective, we had a huge growth which we had in play, and we grew by 30% year on year on our asset book. So there we were sitting on some excess liquidity for 2 months because most of the growth came in the end of the period, which ended up in ensuring that we trade on the treasury side on that and make some good profits on the trading income, but it really depleted the NIM. So that's number one. Number two is, of course, our business peaks also are undergoing some change. The wholesale banking started picking up. The SME has started doing well. So that also plays a little bit. Then the third very technical point which happened last quarter was because our overall funding book has FCY borrowing, which is almost 9% of our funding book, which was almost next to zero last year at the same time. And that went through a blip because of the global challenges which we faced. And the hedging cost went up for temporarily. I mean, that has also come down now. So it is a blip for a quarter, and that significantly impacted the margin last quarter. So fundamentally, these are the three reasons which we got in. Going ahead, I think we are very...
Mr. Mondal, good morning, Prashant here.
Hi, Prashant.
The last point, sir, this is foreign borrowing.
Foreign borrowing, FCI borrowing, foreign currency.
What is the foreign borrowing and what's the cost now?
So foreign borrowing is, for us, is around 9% of the book, which is around 3,300 crores. And that cost is generally supposed to come down. The reason we took it was because so far it's SOFR linked. And from that perspective, it was supposed to come down this quarter, but because of the hedging cost, it went up. But it's a temporary blip because it has come down again. So it is a one-off kind of a scenario. The cost of that is generally below 8%. It is between 7.5 to 7.75. But in that quarter, because of the hedging cost, it went higher than 8% and significantly higher than 8%. But again, that was a one-off kind of a scenario which nobody can predict. It will come down, and with the SOFR coming down, it will of course come down significantly.
You were continuing. You were talking about the road ahead.
So road ahead from Prashant, I will say
on NIMs,
that our NIM guidance remains intact somewhere around 4%, and hopefully a little higher than that. And last whole year NIM was around 4.13, 4.14 in that range. So we'll be somewhere between what we ended this quarter and what the whole year NIM guidance was. So from that perspective, I think we should be hovering somewhere around 4%. But growth has been very, very good for us, and that has helped us in overall increasing our profits by 25% year on year, and quarter on quarter also it grew by 25%.
Okay, all right. Hi, Mr. Mondal. Good morning. Good to see you, Ben. Give us a couple of more details then. The outlook in terms of growth, both in deposits as well as credit growth, if you could help us out with a broad range out there. And also your asset quality, on a relatively low base, there was some increase. If I look at your gross NPAs, there was a little of a spike. Slippages were a little bit higher. So what's the numbers we should be working with for FY26?
So, Nigel, good morning. Yes, I think from a growth perspective, we almost grew by 30% on the asset and 25% on the deposit, which is significantly higher than the system. And we'll continue to grow anything between 20 to 25%, and that we are pretty confident now. Of course, it depends on how the funding structure looks out. On the NPA and slippages and credit cost, let me put it this way, that in spite of all this, we have ended the year with 29 basis points credit cost, which is not bad by any means. We generally guide around 20 to 30 basis points. So we are in that range. Having said that, last year was very different. And this year we had, again, 2 or 3 specific issues. One is the unsecured and the MFI slippages. And when you take that slippage, because we take upfront provisioning a lot more there on the unsecured and MFI side, that created some issues. But good part is that book is now less than 3% for us, including credit card is 3.3%. So that book is running down significantly. The second part is we had a migration provision this quarter for the one account we slipped last year. From that perspective, the migration provision has come again in this quarter. And third is, of course, we have taken some, against security, because generally, regulatorily, you don't need to take any prudent provisioning against security deterioration unless it's below 50-60%. But for some of the accounts, because we could afford this quarter, we have
Mr. Mondal.
Yeah.
Sorry, sir. I mean, just to make it a little simpler for our viewers, many of them would be your shareholders as well. So on credit costs, the spike that we've seen in the fourth quarter, will it reverse in Q1? What is your guidance on credit cost for this year, FY26?
So FY26 credit cost should be below 30 basis points. Last quarter was a little higher than 50 basis points. It will go below 30. And hopefully we should be able to contain between 20 to 30 pretty comfortably next year.
Okay, Mr. Mondal, always a pleasure talking to you. Thanks a lot for joining in. Wish you all the best for the coming fiscal. And we'll keep chatting up with you as the year progresses. For the time being, though, we'll slip into a short break. You come back, we'll have Sudarshan Sukhani as well as Mitesh Thakkar who will be joining in to give us their technical trades. Don't go anywhere.
Okay, welcome back. There's 10 minutes to go for the pre-open session. There's some more help on the liquidity front from the Reserve Bank of India, and unexpected. So RBI said that they'll buy an eye-popping 1.25 lakh crore of bonds over the next 4 weeks. Lata is here with the motivations, at least what we can gauge. Lata, over to you.
Well, it's a massive number, 1.25 lakh crore. Even in the past few weeks, when there was liquidity crunch, they didn't do such a huge purchase of bonds. And now actually the market has over 1 lakh crore of surplus liquidity. And therefore, this is very surprising. Market is coming with 2 sets of guesses from the people I spoke with. One guess is the Reserve Bank had a lot of forward sell dollar positions. And we know that, they did buy-sell swaps in the past 4 months in the run-up to March, run-up to April. And therefore, that buy-sell part of it is maturing. 80 billion we knew as of February were in their books. And maybe 30-40 billion is maturing now. And that is why, when you sell the dollar, you're pulling back rupees. So they're trying to replenish it. But it is surprising because anyway, there will be a May dividend. So why are they doing this? The other set of reasons is that over the year, the Reserve Bank expects that there will be a shortfall of 4 lakh crore. Why will that happen? Because you and I will withdraw cash. During the festival season, every year 2 lakh crore gets withdrawn by customers. Another 1 lakh crore gets set aside by the banks as cash reserve ratio. Every time you take a deposit, you put 4 rupees away as cash reserve. That is another 1 lakh crore through the year. And a final reason is that Reserve Bank owns about 1 lakh crore of bonds which will mature this year. When it matures, the money is paid by the government to them, that again takes away liquidity from the system. So this 4 lakh crore, maybe they are front loading some of it, is what one set of guesses are. They believe the forex is not a good explanation because enough forex flows are coming from equities and bonds, and that will neutralize what Reserve Bank sells. So probably this is the reason. Be that as it may, we are more interested in the impact. Impact will be bond yields will definitely fall back towards the 6.3% mark for the 10-year. And for banks, it is manna from heaven. Expect them to go boom, boom, boom because, deposits can be cut more easily. Liquidity is available. And of course, their mark to market on the bonds also will be higher.
I like that explanation, Lata. Boom, boom. All right, well, yields lower and financials as a space perhaps gets some more help at the margin. Lata, thank you very much for that. Well, let's just quickly run you through the trades that you need to be putting on. Sudarshan and Mitesh are with us to tell you what you need to do and how you need to position yourselves. Gentlemen, morning. Great to have both of you here. Mitesh, you go first. How are things looking? I mean, yesterday was a complete reversal. And by the way, Sudarshan, to you, congratulations. I think you were saying that the correction is over. So it lasted exactly 1 day after almost 2.5 weeks of up move. That is yesterday. And I'm going to come to you on that. But Mitesh, you go first. How are things looking this morning?
So, Prashant, maintain this view that, basically the market is likely to consolidate with 23,850, 900 as the lower end of the range and 23,500, 550 as the upper end of the range. So I think we will be in this base building activity for the next few days. Yesterday we were on the buying side. Today I would advise, in case you get closer to about 23,450 plus levels, I think that will be a time to take some profits off the table and then trail your stop loss and see if there is strength to get past the upper end of the range.
Okay, got that. Sudarshan, what would your trades be? I mean, the GIFT Nifty is indicating a 50-point up move.
Good morning. See, the market was a buying opportunity yesterday. That continues. Now, the Nifty is also in a trading range, and we have support resistance somewhere around 24,400, which is almost where the markets are going to open. I'm assuming that this resistance will be overcome, and if that happens, then we have two factors to fuel the rise. One is an ongoing uptrend that started yesterday after a small correction, and second, a breakout from a trading range. So I would be a buyer. Now, where exactly you buy, as yesterday also I explained that is a matter of tactics. If you are long, stay long. If you find any minor dip in intraday dip, early morning dip, go long. But primarily in the bank, in the Fin Nifty, as well as in the Nifty, there is an opportunity to stay long.
All right, let's focus on individual stocks then, gentlemen. Sudarshan, you go first. Tell us what's on your radar.
Well, it's an all-buy list, but primarily mid-caps. Zydus Life is a buy with a stop under 868. Glenmark is a buy, the stop under 1384. From the financial space, Manappuram, and if you see the charts, it has been rallying consistently. Manappuram, that's because of financial services, not gold just. Manappuram is a buy, the stop under 227. And Siemens, after that ex-bonus price drop, is now again an opportunity to go long to stop under 2850. It's spread across sectors because I think the markets have discounted all kinds of bad news.
Okay. All right. Got it. Let's come to Mitesh's stocks as well. Mitesh, morning to you. So what's the list like today?
Morning, Subi. Again, an all-buy list for me as well. ICICI Bank is a buy with a stop bid of 1400 for targets of 1480. Bank of India is a buy as well. Keep a stop at just below levels of 116. Look for targets of 124.5. A buy on Bharat Forge with a stop below 1100 for targets of 1160. And BPCL is a buy. Keep a stop at 304. Look for targets of 325.
Okay. All right, gentlemen. Thanks for the calls. We'll come back to you a little closer to market opening. Take a break. And we'll have the pre-opening rates. Also, we will be talking to the management of IRFC about their fourth quarter numbers.
Okay, welcome back. We're, of course, tracking the pre-open rates, which will start to come up in about a minute or so now. and it should be higher. The GIFT Nifty has been indicating a 40-50 point up move. And then we pick up from that point on. Amnish Agarwal has, of course, been sort of speaking with us with his perspective, with his thoughts. Amnish, thank you for waiting. I just wanted to get a quick sense on this entire Apple news flow, which is a big one for the industry, really. But from a listed perspective, do you think there are any opportunities at all? The news that for all the phones, iPhones, which are going to be sold in the US, I mean, the company is saying that they want to make those phones out of India.
You see, if that happens, I think it could be actually beneficial for India, not directly but indirectly, because we are currently in the process of setting up the entire system. And it is, you see, when it comes to purely assembling the phones, there is very limited value addition which happens over here. But when it comes to looking at the, you can say on the ancillary side, there's a lot of scope then to set up the infrastructure for the semiconductor, for other components, etc., which go into that. And I think the major, I would say, gains will lie over there. Okay, so I think it is a positive news more for the EMS companies or the companies which can then collaborate with Apple and they start manufacturing the components over here.
I mean, stocks like Dixon, etc., typically perk up when you have this Apple-related news flow. But the point is, so far, from the listed universe, nobody is part of that sort of ecosystem, that value chain with regards to Apple. I mean, Dixon, etc., of course, they've got the entire Android phones on there, and they make them for all the bigger sort of Android brands.
You know, but Prashant, maybe right now I've seen that report, but maybe it's easier said than done, because unless there is a rollback in the US administration sort of thinking, iPhones were one of the things. I mean, these iconic items, right? iPhones, the motorcycles, the bourbon whiskey. There was constant chatter about why can't these phones be made in the US. I mean, logic probably is a different argument. But let's see if they can be allowed to ship the entire manufacturing going into the future to a country, including, of course, India.
You know, I was told that there is apparently right now a 20-25% difference between the cost of production between China and India. And what happens is that if these tariffs in China go up more than what they go up in India, it makes more sense. That seems to be the motivation. Now, of course, if they want everything to be made in the US, that is, I mean, that is, of course, far tougher than moving it out of China to India. I mean, the cost will go up, I don't know how many.
Dramatically,
Dramatically.
Yeah, absolutely.
But, you know, a couple of, just one word on this, a couple of leading EMS players, they have said that their phones have been ringing non-stop. So inquiries have gone up dramatically. We'll try to quiz them when they come on the channel, but I know, you know, that's the word that's coming.
Absolutely, and even I remember our conversation with Dixon, very small, minuscule portion, but they do some work with not Apple as of now, but you know, with the different clients in the US. Anyway, the pre-open, by the way, has started, so let's take stock of it. About 30 points higher, that's what we're getting in the pre-open. Let's wait for the rate on IndusInd Bank to settle, maybe. It's right now in pre-open is showing down 9%. The thing is, this is not entirely unknown. Like we've been saying, Ritu was pointing this out, that there will be other senior level exits. And that's exactly what happened yesterday. But for what it's worth, I don't know if Amnish is still with us. Amnish, if you can hear me. Very quick last call. IndusInd Bank, 7:55 now after this news.
You see, IndusInd Bank is getting spate of bad news one after the another. First it was MFI, then this year entire, you can say, losses which were there in their derivatives and treasury. So I think one thing is very clear, that there is going to be a very, very big change as far as the entire, you can say, the top management of IndusInd Bank is concerned. And now the main thing is, if you can say your deputy CEO or the person of that stature goes, it means that for the top two jobs, IndusInd Bank will have to now look outward for a candidate. But having said that, if you look at the past history of IndusInd Bank over the last, say, 7-8 years, then it is the second time it is happening, and every time you see stock gets better to even 500, 600 rupees. But inherently, I would say the business model is not bad. They need to put checks and balances in place. And I think over a period of time, the stock has recovered in the past also. So I think it might have you can say, some kind of an initial reaction. But I think if they put their house in order, if they tighten their, or you can say, compliances and all you can say regulatory stuff, I think that this could be a stock to watch out for, because the MFI trouble for all the banks is any which way is going to be over, say, in another couple of quarters. So yes, it's a high risk bet at this point of time. But definitely, I think all these changes are expected and more might happen over the next few months.
And the stock, by the way, is already recovering, and that's the point that Amnish, I think, is also alluding to. I mean, if they're cleaning house with a fresh new set of management is going to come in, and it's already well advertised as we've reported, others, of course, reported after us as well, then I don't know if this, the 9% cut's gone. I don't know if even if this 5% cut will remain, and it should come up. Yeah, I think it already is. It's flat. I think now it's the real rate. It was just the sort of pre-open thing which was happening. But otherwise, I mean, I think, wouldn't be surprised if it goes the other way. But 8:30 now in the pre-open with about 4 minutes in. Najil, but we have the management of IRFC with us.
Well, that's right. And I think on Sami Hotels, we have a large trade that's taking place. So I'll just keep an eye out on that. We had the news flash at the bottom of your screen. But as promised, IRFC, that's the next management on the show. It had a little bit of an off year, actually. It is quite a weak set. The AUM declined, the net interest margin was a little bit weakish, but we want to understand what the management has planned for the coming year. So to help us out with that, we have Mr. Manoj Kumar Dubey, the Chairman and Managing Director at Indian Railway Finance Corporation. Hi, Mr. Dubey. Good morning. Thanks a lot for joining in. Well, let's get straight to the point then. AUM declined on a quarter-to-quarter basis. What happened? And if you could tell us, what kind of growth are you projecting for the coming year? That's FY26. Please go ahead, sir.
So, Prashant, as you know, FY25 we closed on a very steady manner. And the reason for a flattish kind of result is, the fact that for the last 2 years we hardly had any disbursements after doing so well till FY22-23. The reason was Railways was not asking for any disbursement through extra budgetary resources for the fact that government budgetary supports were very high for the last couple of years. So in the last quarter of FY25, we decided to diversify, and that perhaps is going to be a game changer for this company for the fact that in the last 40 years, we had only one client relation with Indian Railways. And the margins there were in terms of 35 bips or 40 bips. Now we have started diversifying in all the assets that are helping to the Indian Railways or the railway per se. And as you know, in the last 4 months of this calendar year, we have already mopped up around 14,000 crores of loan assets. And if this trend continues, we feel that we are into a very exciting times for the fact that with these kind of loan assets that we are garnering, our margins are very high. Yeah.
Right. Mr. Dubey, we appreciate you giving us some clarity in terms of how do you see things pan out going ahead. But we're looking to a couple of numbers. To disbursements, what do you target for this year? What does it mean in terms of AUM growth? And where does the growth come from? Please take it away.
So the growth is coming out from all the assets which are having backward and forward linkages with the railways. And as you know, we have already started participating in the bids. 3 bids on the trot we won in the last 3 months, mopping up around 14,000 crores. What is exciting for IRFC is the fact that the margins that we are going to get out of these bids are nearly 2x to 3x of what we used to get from the railways. So typically, if I give you a number that, say in FY26, we are going to disburse around 30,000 crores. It will be akin to nearly 90,000 crores of disbursement to what we used to do to the Indian Railways. So in these terms, we are finding that there is a lot on the platter. In fact, we are trying to diversify on the metro railways and in the rapid rails also amongst the metros. So those businesses are also going to be very attractive for us. Yeah.
Sure. Mr. Dubey, absolutely get your point that you're looking to go beyond just the Indian Railways to newer areas of growth. So give us some sense. Where, when you close the year FY25, what is the total size of the book? And as this, slight tweak happens in the business itself, what will your target be? I mean, where will your total book size be this year? What will be the fresh disbursements? How much to metro? Some sense of a number. So we understand how much is IRFC targeting to lend this year.
So on the ballpark figure, we are targeting around 60,000 crore of sanction this year. That we have taken the approval on the board yesterday also. And we are, on the conservative manner, we are looking for around 30,000 crore of disbursement this FY. And what I was mentioning, Swati, was that the fact that this 30,000 disbursement, if you are able to do it, it will be akin to disbursing around 90,000 crore to Indian Railways for the fact that our margins will be quite high than what we are getting from the railways.
Okay, all right, Mr. Dubey, this is Nigel on this side. With me is Surbi, and Prashant as well is joining us. So just want to clarify on that, and we appreciate you speaking to us here on CNBC-TV18 News. Just clearing that point, sir.
Get to Surbi, yeah.
Yes, sir. Surbi
Right.
here. So okay, we've got your numbers, 60,000 crores of sanctions, 30,000 crores of disbursement this year. Now let's talk about margin, because you're saying you're targeting these higher margin orders, which could be in metro, etc. So what is the targeted NIM range for this year?
Yes, so NIM, as I'm repeatedly mentioning, and I talked about this in my con call also last quarter. As you know, railways, my margin used to be 35 bps for projects and 40 bps for rolling stocks. Here, my margin is going to be around 100 bps to 150 bps. So typically, what margin I used to get from the railways, it will be nearly 3 times of what I was getting. So that is very exciting for us. And this will surely have a very good impact on my bottom line. My top line may not be growing very huge for the fact that numbers that were coming from the railways may not be in those lines. But I can assure you that because NIM is going to improve every quarter now, so my bottom line will be showing a very good, steady upward trend.
Okay, all right, Mr. Dubey, you want to give us that number? As we understand, non-railway business is much more lucrative. But if you want to give us a NIMS number, could you help us out with that, an absolute number? And also the AUM growth for the year, could you help us out with that? Last 2 details before we let you go.
Pardon?
AUM growth and NIMS absolute number. Please go ahead, sir.
NIM is right now around 1.4, but the kind of NIM that we are expecting should be more than 2% going forward with the mix that we are trying to look forward to.
2% NIM, okay, with 60,000 crores of sanctions and more business coming in from the non-railway segment. That's how FY26 is looking like for IRFC.
Correct.
Got it. Thank you, Mr.
As
Dubey.
of now, yeah.
As of now. Thank you very much. Thank you. Prashant.
All right, Mr. Dubey, thank you very much for that. Well, I'll just quickly run you through the 9-10 calls now. Sudarshan and Mitesh are back with us. Sudarshan, what do you have?
Well, Manappuram, consider buying Manappuram with a stop under 227.
Okay, and Mitesh?
Coforge. I think that's the buy call which I would given for a target of around 1162 million.
All right, there is Manappuram and then there is Bharat Forge from Sudarshan and Mitesh, respectively. Gentlemen, thanks very much. Those are starts in the pre-open as they are coming up. Zensar is the company that we want to talk about, a decent set in the fourth quarter. And just want to kind of play out a few sound bites. We, of course, spoke with Manish Tandon, MD and CEO at Zenar Tech, on the potential impact of tariffs and demand in F526. Listen in.
Tariffs, etc., have been, this whole process has started towards the end of Q4. And that process is still playing out. There have been increases, there have been reductions, there have been takebacks, and so on. So there is a lot of uncertainty just now in the markets. And we are not very sure how this whole thing will play out. So I can't predict what is going to happen for the full year. But I can say that as a company, we are committed to generating growth come what may. And we are geared up towards trying to make the best of whatever is the situation that rises. And that is to some extent reflected in our order bookings. But till now, we have not seen deal cancellations or pause in ramp-ups. But we have seen certain right shifting of demands. So what I mean by that is, when we entered March, for example, we felt that we will be able to do X. The demand was for X. And by the time we finished March, what we found was that it was slightly X minus, right? So, and it's not that things have been canceled. What we saw was a lot of things have shifted right to the next quarter. Associated sectors also, travel and hospitality has also, there is some right shifting of the demand. Healthcare, there is some right shifting of the demand. So we are seeing trickle down effects on other sectors also as of now.
Okay, there's about a minute to go for the market open to come up. I don't know if you can quickly put up the auto ancillary stocks, Uno Minda, Samvardhana Motherson, and those names. I saw some sort of gains come through in the middle of the pre-open. Uno there, Samvardhana Motherson, etc. Also coming up on your screens at this point. I mean, there is a reportage which suggests that those tariffs on auto components which are supposed to go into effect on the 3rd of May, there may be something done later tonight. I mean, in terms of postponement, etc. We've seen similar stuff done for Canada, Mexico. Will we see something similarly done for China as well? So we'll, of course, look at that. But it's a good start. I think we are higher. 24,372 is the pre-open, 24,330 is the open, and 60 points in the green. Nifty Bank is up about 1/3%, the sensex is up about 1/4%, the mid-cap index is up 0.64, and I think the small-cap index is also higher to begin the day. So very, very good start after yesterday's super kind of reversal from last Friday. Essentially is what we had. So 24,400 plus now on the Nifty. 24,545 or so is that level which we put out at least for about 15 days now. 61.8% retracement of the entire fall that the market has seen. And we are about 130 points away from that level. Let's just quickly look at the heat map. Gives you a snapshot view of how things are starting. And then we'll get down to individual stocks because that is where a lot of the action is coming through. So it's mostly all up in the green. I think you got about 5 odd Nifty names which are starting in the red. And as we were sort of saying, IndusInd is very much in the green. Surabhi.
Yeah, IndusInd is starting positive. It's actually the Nifty winner, almost 2% higher. Actually, a couple of lenders are making big headlines. I was looking at beyond the Nifty, UCO and PNB in particular, both reacting to numbers. And for UCO, the business growth has been very, very strong. The deposits are up almost 5%, advances quarter on quarter, I'm talking about. Gross NPA levels have declined. For PNB, I think margins are at a multi-quarter high. So these two stocks are really hitting it out of the park this morning. Anyway, back to the Nifty gainers. IndusInd Bank is in leadership position. But beyond that, BEL, 1.5% higher. Tata Motors, Adani Enterprises. Then you have some big stocks like SBI and L&T, which are notching up gains of about 1%. Trent, ahead of its numbers, is up 1%. Titan, Eternal, so fair bit of consumer discretionary plays. Doing quite well this morning, actually. All about 1% higher. M&M, 1% higher. Maruti is up. So auto, we're seeing some buying in auto overall. Actually, hardly any weakness on the Nifty. There's a little bit of a cool-off in maybe Sun Pharma and maybe Grasim. But guess what? Not even a single Nifty stock is down more than 0.5%. It's a strong, strong morning. And look at the Nifty charging ahead. It's broken out of this consolidation band that I was talking about in the morning. Now we're trading above 24,400. So it's absolute leadership and dominance. And the mid-caps are doing even better, Nigel. The mid-cap index up 1%. So it's a flyer of a start.
Well, that's right. A couple of stocks reacting to large trades that have taken place. Sami Hotels, yesterday there was a large trade. I think this morning as well there was one. The stock has opened up with a gain of closure around 4%. Tata Tech, though, I think there was a large trade that was expected. I think that's got cleared out, and that explains why the stock is down closure around 5% in today's trading session. So let's get both those two up. Sami higher. We have Tata Tech that is lower in trade. You have Fino Payments. The FY25 revenue was in line with guidance. Throughput was up by close on 27%, but that stock has come in for some profit booking. You have RPG Life. That's the other stock that I'm looking at. Well, those numbers I think came in overnight. And I think they look quite good. So that's one of the stocks that's perked up in trade. Big gap up is what we're seeing on that particular name. A couple of stocks that did fall yesterday big time. Case in point being Tejas Networks. That's opened up mildly in the green. So let's pull that stock up. RPG Life now bursting away. Up close to around 10% as we speak. We'll try to get the management on the show. Tejas Networks, I think it had opened up mildly in the green. And the other one was SML Isuzu. Both of them got clonked back in trade. But SML Isuzu as well, it's trying to find its feet. It opened up with a cut of around 5%. Yesterday it was down 10%. Now, in fact, it's holding with a cut, I think, of around 2% or thereabouts.
I just want to mention that PSU banks are charging ahead. So UCO, of course, on the numbers, but even the others, Central Bank of India, Punjab and Sindh Bank, then I saw IOB pop up as well. In general, PSU banks leading the charge this morning. That index is the best performer at the start.
And just one more stock from the tech pack. We had pointed out Coforge, Sabri, the global company. They have had a problem with their balance sheet. But they went ahead yesterday and they sold part of one of their businesses, and that will help them deleverage. They had signed a partnership with Coforge, and the street initially got excited. Then they were questioning whether or not it can get executed, but they're going to get their book in order. The read-through is maybe, in fact, that deal as well sees the light of day. Could explain one of the reasons why Coforge is doing a relative outperformance.
And Coforge, I think, is getting a little over 400 crores from this exit, if I remember the numbers. I'm not sure.
No. So the deal is with Sabri. Sabri is the one that's getting the money. That's the one that did a collaboration with Coforge for around $1.5 billion. So there was uncertainty whether or not the deal will actually see the light of day. Now with them deleveraging their balance sheet, that's the global company, Sabri. The possibility is that it gets a green signal. So that could be the reason why the stock is in the green.
Okay, results on the 5th of May, Coforge, and it's a name we've highlighted for some time now as potentially, a stock where there is a large disconnect between, or at least there was a disconnect at $6,000 from where it has recovered about 1,500 rupees between actual growth rates and what the market has beaten it down to. So very sharp gains. 100 plus points on the Nifty is what you have. So 24,430 on the index, and it's looking super good. You got about what, 7:1, 8:1 advances to decline ratio. It's still early, stocks are still opening up, etc. But for what it's worth, for now, it's all on one side, mostly everything on one side, which is on the way higher. Tejas Networks was down sharply yesterday. It's up about 2.5 right now. There is Paras Defense, which is up 4%. I'm not sure there's any news flow. And I was talking about auto ancillary companies, right? I mean, look at Sona Comstar, 4% gains. And these are all coming with solid gains. Bharat Forge is up 3%. Bharat Forge, I think, was also a call from Mitesh in the morning. And there is Motherson, which is up 2.5%. So Auto Angs as a pack is doing well this morning. I'm not sure. Is it with regards to this news flow, pause as far as these auto tariffs? 3rd of May is essentially when they're supposed to come into effect. RK Forgings is another one. RK Forgings was sharply down in the morning. Yesterday, it recovered quite a bit. That issue of inventory mismatch, promoter essentially saying that they are putting in money. And of course, there was a con call as well. We spoke with them. Stocks about 2.5% higher. Still not come up to the levels from where it fell the week before last. Last week, it was down about 12-13% or so. But otherwise, I mean, it's a pretty good-looking screen, I have to say. Surabhi?
Prashant, on auto, I don't know if this is what you were referring to. But there was a Reuters story that I was reading that seems to suggest that Trump and his administration is in very close talks with US automakers, and they've agreed to remove, I think, duties from specific parts, components which are needed.
So those tariffs are supposed to come into effect on the 3rd
of May, yeah.
And I mean, some deal may, I would say, the report said tonight we may actually see something which may
This is, Lutnick is on record to Reuters, a statement saying that there will be a deal and a lot of the components which are required, they will be exempt.
Absolutely. And we'll, of course, as and when that happens, we'll try and speak with Indian companies as well if there is any implication whatsoever. But for now, I think there is a bit of a bump which is coming through. Ajay Argal is with us, Senior Vice President and Portfolio Manager, Emerging Markets, Equity, India at Franklin Templeton. Ajay, good morning. Good to have you with us here. Prashant, this side. There is it seems to be a clear marked shift. Determined FPIs wanting to come in and come in quickly, lifting all boats here. That is on one side. On the other side, you've got earnings for the 4th quarter, which were not expected to be great. And they're not great so far, what we've seen. I think that's at least what I've observed. So just that dynamic which is playing out, Ajay, how do you look at it? And how far more to run?
Yeah, so this is typically the way the foreign investors work because they have been, as we are aware, selling India for a long time. It is just that right now the confusion which is there in the global markets with respect to the tariffs and the implications thereof on the various economies and the stock markets is just that some of the foreign investors think that India has kind of underperformed slightly during the first few months of this year. So it was kind of a trade for them because they continuously need to get in and get out of the various markets, just like we kind of try to do the same with the stocks. So it's part of their daily job in terms of trying to identify some short-term opportunities as well. So I would think that they're approaching it this way, and everyone is looking for more direction and more clarity as to what is happening on the tariffs front. And till then, right now, maybe they were spotting some opportunities.
What's your assessment of earnings so far, Ajay?
Yeah, as you rightly mentioned, the earnings are expected to be muted, and they are in line with that. So generally, the expectations have been kind of met, and the expectations itself was very low. So it's kind of mid-single digits. So two of the largest sectors, a lot of earnings have come out, which is financials and IT. So financials, generally, the earnings have been in line and slightly better in some cases. Whereas IT, as we all know, the earnings expectation was very low and it was kind of met. But more importantly, the commentary was slightly more muted than expected. So in that sense, there is no positive surprise from the major earnings which have been declared so far.
Okay. Ajay, hi. Good to have you on the show today.
Good morning, Survey.
Good morning. Good morning. So the sense is, I mean, how to sort of play things from here on. And first of all, give us the sense on whether you expect the market to get back into its winning ways, or do you expect more consolidation? Because the recovery from the lows in April has been quite dramatic. It's been, I think, better than what most bulls would have forecast. So are you expecting a very momentum-driven market again? Or do you expect more consolidation in which maybe, just going back to quality, going back to value might be a good approach?
Yeah, I would be in the latter camp because there is a lot of, let's say, confusion in terms of what the global situation is. So we are aware of the tariffs, and I guess you were talking at the beginning of the show how some of them is getting reversed. So every day the dynamic is changing, and even the companies are finding it very difficult to make any plans. So all the capex plans are on hold. It's a bit difficult for companies themselves to assess, and so therefore for the investors it is even more difficult. So generally the investors are more in a reactionary mode. On top of that, of course, as far as India is concerned, now we have this India-Pakistan situation. So I don't think the market is right now discounting any of the repercussions out of that. And obviously, no one knows what's going to happen in the future. But the point is that the markets don't like uncertainty. And we are also aware of the slowdown in the global growth and the growth in India. All the estimates in India GDP growth also have been cut to the extent of 30, 40, 50 basis points. We are now closer to maybe 6.2, 6.3%, which also might be difficult to achieve. The earnings growth also have been downward revised. So till some time back, we had kind of 15% for FY26. Now maybe the analysts are estimating more in the range of 12 to 13%. So there is a bit of caution in the air all across because the clarity is not there in terms of the immediate future. Though the attractiveness of India continues in terms of the relative growth being higher. So that story does not change. And that is why, as you were asking some time back in terms of the foreign investor interest, every now and then the interest will be there. And the foreigners will also be looking at the trading opportunities. So it will be a very kind of a consolidation market. I don't think it will be a very momentum, secular, one-way kind of market.
Okay, all right. Hi, Ajay. Good morning and good to see you, Ben. Ajay, the markets are appearing to get their mojo back. And if this sort of buoyancy continues, then maybe those stock market players that had seen a big pullback, barring a BSE, of course, they could return back into play. What's your take on them? Your BSE that's made a fresh all-time high. Valuation-wise, you can argue that it's got too expensive. I think yesterday they've introduced the block deal window with T+0 settlement. So that could be one factor that's playing out. But otherwise, as a space, that got a lot of attention. Then it got slammed. And some of the stocks are making a comeback. How do you play it?
Yeah, so we are generally a bit cautious on the capital market related plays. We had played it earlier till last year. And of course, last year the markets did very well, and all the stocks related to that, they being derivatives, their business being derivatives of the markets doing well, they had done well. So in some of our funds where we had positions there, we had booked some of the profits. So right now we are approaching it cautiously, because as I said, we believe that the markets will be in a consolidation phase. It will not be a very secular kind of market, which really helps the capital marketplace. So it is better, the better opportunities are available in terms of relative growth in the other sectors.
Okay. Ajay, then let's ask you what you would definitely avoid in a market, given the uncertainties that you described, and earnings are obviously a big risk. What are you strictly staying away from?
So there isn't a particular sector which is looking like very bad, because most of the sectors, it's not as if any particular sector, the valuations are very attractive, and some sectors, the valuations are very high. So there is a bit of correction within the valuation. So as we have been talking for some time, and I was here on the show as well talking about how we used to like financials. We still like the financials, but now the valuations are better. So if you look in terms of avoiding sectors, we haven't avoided any sectors as such, but we are underweight a few. So IT is one sector, at least in the focus fund, we are underweight. We have been underweight with the same assessment that the earnings growth and the business growth, especially in the US corporate sector and the big banks there, which are the big clients for the Indian IT, they will have an issue with this kind of confusion and talks of US recession, and therefore the IT expenditure, the growth may be muted. So we have been underweight. And though the stocks have corrected quite significantly, we still feel that it's better to remain underweight till things improve on the business front. Consumer staples is another sector where we have been underweight due to the tepid growth and the valuations not being corrected anything significantly. So that is another sector where we remain underweight.
No, got that. Ajay, by the way, defense stocks are doing well. The shipbuilders are looking up. Mazgaon is up 3%. And I saw Garden Reach as well, which was up some 3-4%. There is Paras Defense, which is higher, Data Patterns, and a few others as well. So that's one pack which seems to be coming up. Bandhan Bank is up 4%, 171. It was not there in the mix when we started in the morning. We looked at stocks in the first 5 minutes or so of trade. And more names are sort of course, being joining the list. Premier Explosives, I think, right? I mean, the 7-8% pop coming through on that one at this point in time. Ajay, thank you very much for joining us. Good speaking with you, and we'll speak again soon. Thanks indeed for joining us. Surbhi.
Okay, all right. That's the market conversation. And the market, for the time being, is having another good morning, 100 points up on the Nifty. The next company on our radar is AWL Agri businesses. Of course, earlier, this company was known as Adani Wilmar. And then Adani's, of course, have moved out. The company reported a mixed set of numbers for the fourth quarter. The revenue zoomed higher, almost 37% growth at the top line. The margin, however, has moderated a bit as edible oil prices have been on the rise. To talk about this and more, we have Anshu Malik, MD and CEO of the company, joining in, as well as Shrikant Kanhare, Deputy CEO and CFO of AWL Agri. Gentlemen, thank you very much for joining it, both of you. Mr. Malik, if I could open with you, and I'm just sort of rewinding back the numbers for our viewers as well. We'll just have them up on the screen. If we talk about the volume growth, I think it's been pretty good, because in the fourth quarter, edible oil saw about a 7% volume growth. And that's obviously helped boost your revenue, the top line, to 37% as well. What is the outlook? Let's start with the edible oil business. What's the outlook for the next couple of quarters, or if FY26, if you can share that, both in terms of pricing on edible oil as well as volumes?
Thank you and good morning. The volume growth essentially has come from our aggressive distribution expansion that we have been doing for the last couple of years, particularly the rural markets. And we now have touched more than 50,000 small towns, as we call it, where we have appointed direct distributors. Direct reach has also gone up by 19%. So number of people on the street has improved, and we have increased the direct coverage, because in essential commodities, the most important part is your availability in the retail outlet, and that is why the volume has gone up. On the edible oil front, I think the prices and all this are very stable now. And over the last couple of months, things have been stable, and we expect this to continue with good monsoon coming, and that is what we are all hoping for. The Rabi Kharif crop will be very good, where soybean, groundnut will come. And I am, because of the new crop that will come, I think the prices will be stable. Mustard oil crop has been very good. Mustard seed productions around 108, 120 lakh tons, in that range. That is what people are saying. Very good crop, and the yield, oil content is also good. So overall, I think edible oil is very comfortable in terms of seeing an.
So you did 9%, I think, volume total full year. This was in, I think, in FY20, in the previous year, basically. So 9% volume growth. On what will you do this year in edible oils, and also what's the margin going to be? Some sense of pricing, and therefore what margin should we expect on this business?
See, on growth front, we are considering a target anything between 7 to 10%, depending on how the first two quarters go, because that is very important. One, and two, on the margin front, I think stable prices will help the brand to give a stable margin, and brands always like stability in prices, and that I think this year the brand will give a better margin.
So just one final question, Mr. Malik. Since you mentioned that a bulk of this 7% growth is coming because you're boosting your distribution in rural, and you really want to be where your customers are, I just want to understand, and quick commerce has been growing very well for you as well over this year. Just want to understand whether quick commerce is basically replacing the demand that would have otherwise come from Kirana, or whether it's adding to your volumes.
One is that quick commerce, we have grown by more than 100% this year. And that is helping us, because good brands are picked up by the consumers, because we understand that these consumers are better educated and all that. So they like to buy brands which they are aware of. That is one. Two, it has slowed down the modern trade to some extent, because the consumers who are going to modern trade, who are used to going to bigger shops or self-service stores, have now gone online. That is one. Tier 2 and Tier 1 cities, we have seen that some of the big Kirana shops have got impacted because they had good clientele, and those were the people who shifted to online.
All right. Hi, good morning, gentlemen. Good to see you all in. So alternate channels, they generated close to 3,600 crores in the last year. For this year, how much will it generate?
I think it should grow at around 35-40% minimum.
Okay, got that out of the way. Also, if you could help us out with, the South focus. In FY25, the South region has grown by close to around 25% in branded edible oils as well as foods. Yes. I think roughly it contributes close to around 10% of the total branded sales right now. Yes. What kind of a contribution we're looking at from there?
See, we have not been very strong in South historically.
Yes.
And we have been focusing on it for the last 3 years. Now it contributes 10% to our overall volume. Both food and oil is growing there. And I think this tempo of 25% growth should continue for a couple of years.
Okay, got that. All right. So also, if you could help us out with your market share, the palm oil market share, I think there was a bit of a decline by around 140 basis points. So could you tell us category-wise, how do you see your market share move? And if you have a target, you could help us out with that as well.
See, edible oil, on palm, you are aware of that the palm prices went up, and it was higher than sunflower oil prices. So obviously, consumers who were buying palm oil shifted to the next available soybean and sunflower. So the palm oil volumes dropped, and our share also dropped. That is one. And we are number 2, second largest palm oil player in the country in terms of branded packs. Our soybean oil volumes have gone up, so market share has gone up by almost 10 basis points. Sunflower by 20 basis points, mustard by around 30-40 basis points. So overall, all other oils have grown well, but palm has gone down. That has impacted our overall market share, which has come down by 30 basis points.
Gentlemen, morning. Prashant here. Mr. Malik, if I can ask you, I remember when this entire Russia-Ukraine war started, we used to discuss impact on edible oil prices, etc., impact on crop prices. Now we are at a position, I don't know, but I mean, it's been on for 3 years now, much longer than what anyone thought. If this were to get to a near-term resolution, Mr. Malik, could you give us a sense of what the implication could be on pricing or prices?
I think over the last 3 years, the trade has managed to how to grow crop and process and export. So all the roads, whether it is from road route or the sea route, everything has been explored. And today, by and large, supply chain is very, very comfortable. And we see no reason to be afraid of any eventuality in that area. Things are much better and supply chain is much better. Argentina and Brazil also supplies us some amount of sunflower oil, so we are having from there. So overall, I think edible oil is very well placed today.
So there is no, a premium which has been built in where prices, if this were to be resolved, so I'm talking about resolution here, not escalation, there's no implication. It's kind of settled prices.
Yes. Because by and large, things are stable. So even if war comes to an end, nothing much will happen.
Okay, got that. Mr. Kanhare, if I could come in over here, let's talk about the FMCG business as well. What sort of growth are you expecting? In the previous quarter, I'm looking at the numbers now, about 9.2% growth over here. Again, overall for the year, what can we expect from your FMCG business? Which segment will drive it? How are margins looking at commodity prices right now?
See, the food FMCG business certainly is a focus area for us as we go forward. This year, we have been able to showcase a good volume growth in FMCG. And I think the two basic food sub-segments we have, one is rice and wheat flour, which will drive the growth next year for us. Currently, this business, of course, we are running at a EBITDA neutral by design as we are aggressively spending on distribution and infrastructure for the food to grow. This basket is already now close to 1.2 million tons of basket for us in our entire scheme of 6.5 million tons. So it's already contributing close to 18-19% of our overall schemes. Our expectation is that this should continue to grow in a double digit as we go forward. On margin fronts, as I said, currently it is by design EBITDA neutral, should continue to be in EBITDA neutral for next couple of years, given that it is still in investment phase. And
right.
So that's what our outlook is on this particular segment.
All right. We had many more questions, but we're out of time. We're on an earnings treadmill. Hope you understand. Mr. Malik and Mr. Kanhare, appreciate both of you coming on and sharing those details with us and, of course, providing us with some outlook. Very helpful. Thank you. Markets, of course, by the way, come off the day's high. Nifty's got about 50 points on it. We are back with the management of Hexaware on the other side.
Welcome back. Let's focus on a tech company. We have with us Mr. Sri Krishna Ramakarthikeyan, the CEO and Executive Director at Hexaware. Hi, sir. Good morning and good to speak to you as always. Well, the global environment is quite uncertain. I think because of that, you haven't given us a concrete annual guidance. But in the previous year, in calendar year 24, you grew by roughly around 13.5%. What about this year? What kind of a growth estimate could you give us? Will it be better than the growth in the last calendar year?
So the fact that we've not given a guidance is a conscious choice we made at the time of listing. We said there'll be good and bad economic cycles. We will not provide a guidance. So it is not as a result of the current macroeconomic situation. So that's point one I want to clarify. Point two, on our performance, we actually gave some detailed commentary earlier today about what we expect our outlook to be. I mean, Q1 is expected to be a soft quarter, which it was. But the good thing is that we won a number of deals, which puts us in a really good spot for the remainder of the year. We said Q2 will be a good quarter, and Q3 will be a great quarter, and Q4 will also grow.
Okay, all right. But you don't want to tell us whether it'll be better than last year in terms of a growth rate?
We've chosen specifically not to give a guidance.
Let's focus on a couple of verticals then. The banking vertical, you know, in the past quarter, you saw a revenue decline of close to around 12% on a quarter-to-quarter basis. What went on there? Was it a client-specific issue or, you know, if you could clarify on that front?
So let me zoom out a bit. I think banking for the full year for us, for the full calendar year, will actually outgrow company average. They will do very well. You will see a sharp turnaround, potentially with a double-digit Q-on-Q growth for this vertical, even in Q2. So there's a number of one-offs that led to our reduction in Q1. This was also there in Q4 last year, so it's somewhat a continuation of that. But actually, banking will do very well for us this year.
Okay, you're saying it'll outgrow the overall company growth. Just a quick word on margins. So margins were at about 17% odd in the first quarter. You've said in the past you have levers to improve margins. Could you talk to us about what we can expect for the year?
So we've said we will be in a range of 17.1 to 17.4 for this year. And we've been steadily improving our reported margins for a number of quarters, and we will get to this number. We actually have further levers for improvement from that point onwards, 100 to 150 bips. However, for the next, I'll say, several quarters, our focus is to improve growth and not to improve margins. So we'll get to that 17.1 to 17.4 range and then stay there.
Sri Krishna, I just want to go back to the BFSI point that you made, because you seem to be sounding very, very optimistic that that will continue leading growth. Though this segment declined quite a bit in the first calendar quarter for you. So can you just explain what happened? Yes. Are decisions getting deferred? What gives you the confidence? And also, what is your total exposure to US as a geography? And within US, the BFSI part?
So, number of questions, number of answers. First is BFSI is three different segments for us. So this is specifically banking. FS is another segment, and healthcare and insurance is another segment. All of these we actually expect to do well. We expect to lead company growth. But the specific decline was in banking. This is not as a result of new decisions being delayed. Actually, we won a number of deals. This is as a result of a number of older projects that are coming to an end. That's the nature of these programs. They are, you know, one-off builds of a digital bank and things like that. So that was expected. But we will do quite well for the remainder of the year. FS, which is the other component you referred to, already grew very well, in excess of 20% year on year, 5% quarter on quarter or so for this quarter. And that will continue.
Banking to come back as well. Just very quickly, 10 seconds left on the call. Wage hikes. TCS is delaying them or deferring them. What about you? Are you looking to give wage hikes?
Our wage hike cycle is effective July 1st. We will stick to it.
Okay, all right. You will stick to wage increases. Now, I just want to squeeze.
No, I just want to know
the wage hikes.
You know, yeah, well, wage hikes. Any kind of guidance, quantum, anything, if you could give us, and also if you could look at it. You know, there was a decline in the number of people you'll have put on in the last couple of quarters, but I believe in Q2 you're looking at upping that number, right?
So even the decline in Q1, actually, if you peel the onion a little bit, we actually added about 100 people in IT. We reduced several hundred people in our BPO business. In Q2, we've said we will hire between 1,800 to 2,000 people in IT. So that's a gross hiring, but that's a confidence of our future. On wage hike quantum, it's still a little early. Our cycle is effective July 1st, so we don't know that answer yet.
Got it. All right, we'll leave it there, sir. Thank you very much for your time. Appreciate you joining us here on CNBC-TV18. Good luck. Well, another IT company, we are KPIT Technologies in focus. Now, with KPIT, the numbers are very good. Deal wins are good. I mean, revenue growth, margins. But the bummer, if I can call it that, is that there is no guidance. So let's welcome in Mr. Kishore Patil, co-founder, managing director and CEO at KPIT Tech. Mr. Patil, good morning. Thank you for your time. Prashant, this side. Why no guidance, sir? You have enough orders on hand, you have visibility, but no guidance. Why is that?
I think we should start with celebrating something which already have in hand, which is rare in the industry right now.
No, it is rare.
That's a good way to get into the next year. So that is the number one part.
Yeah.
The second is, I will answer your question, but just to give you the... if you look at the deal wins have been very good, and if you see that there were certain questions earlier about we have won this large program, SDB, is that over? Are there going to be new programs, etc.? So we have, MBRDI, we have also the partnership which we have announced during the quarter. So the point is that we are making a good progress overall, and we are also, increasing the pipeline. In the quarter two, we said that the market is a bit uncertain, soft, is what I said in the analyst and other calls also. In the quarter three, we said that we are moving from there and we are seeing a better visibility. Things are happening. We know exactly what they want and what we need to address, and we are ready for that. On the quarter four end, now that the March end, I feel we have a better understanding. Not only that, now engagement and also the pipeline to do that. I think, if I may say that, so there is a good progress which is happening. What is happening in the US is kind of an interruption, and the dust should settle down in a quarter or two. It is not a full, it's not like a 0-1. It's happening in pockets, things are happening. But some of these larger engagements, wins which we are having, already we have started working in some cases we have started transitioning. But the big scale up is, I think, will happen once this uncertainty we should go in next 3 to 4 months. And I think that will give us that would be a good time for it to come back.
With the guidance, right? in 3 to 4 months. So it's possible you reinstate a guidance once you have this some more clarity coming through. But at this stage, as you look ahead, will we see at least a 10% growth for FY26?
Yeah, I know that you want to put me a number, but I can only say that.
At least. I mean, that's, and that could be lower number as well, but gives us some sense.
No, I think, let me tell you, it is not that, we are a pretty ambitious company and we have certain goals. And I have always said that if you look at, I am very confident that if we go to medium term, if this interruption was not there, we would have been anywhere between 18-20%. So I think that's what we are calibrating due to interruption. So this year, this first half, of course, is something which is going to be a softer one for this reason. But I feel we should be in a position to come back reasonably well in the second half.
So, Mr. Patil, just to understand that what you said is that if there was no tariff uncertainty, then you would have been reasonably confident of doing at least 18 to 20% growth, right? Which is ballpark what you did in FY25. Yeah. So should we take that as a sustainable run rate? And this is not a question only for Q1 or Q2, but is 20% growth a sustainable run rate for KPIT Tech, X of global disruptions, like what we are witnessing right now?
Absolutely. And that's what we have been saying, that in a medium term, we have been saying that that's what we can generally
Got it.
And if you look at last time, we have done that. I think this is at a high level, I would say
absolutely,
that. But
absolutely.
Put any number right now.
No, absolutely, sir. We're just trying to understand, because from a higher base of almost 35-40% growth, now you're saying 20% is very sustainable. for the company. Now let's talk about the current disruption, because from what you're saying, it seems that everything has not stalled on ground. Your partnership with Mercedes is progressing. I think you've also indicated that you could be looking at more wins in China. So to what extent can you give us some more color? Have companies deferred, decisions? Will program ramp-ups be, say, impacted? What exactly is happening on ground? Because I think we'll have more clarity in July once this, deal window, 90-day deal window is open, is shut. But exactly what's going on and how much more additional revenue are you hoping to get from the Chinese OEMs?
Chinese OEM, so let me first address China and then I will come to your second question. So China is more strategic for me. I mean, for our business, because it's the largest market in automotive, it's a very innovative market. So we want to build an organization there. I mean, we'll have revenues, this, that, but we'll be patient. It's a long-term commitment we are making to build it. But at the same time, we see clear opportunities for us to engage with them. Whether it is first for understanding technology and taking it to our global OEMs, how efficient it is because they want to bring some of those features in their cars, etc. The second is for our global OEMs who are in China to build a competitive features for China market. And third is some of these Chinese companies who want to go outside China, what we can help them. So I think there are 2-3 ways, and that's what we are focusing on. It is going to be a little long haul for us, I would say at least a medium term, but we are making very concrete progress in building alliances, partnership, engagement, and building our own organization to begin with. And of course, very importantly, first priority learning from China. So that's what we are doing for the first part. Coming to your second point, right now the way it is globally, most of the OEMs have the production program in next year or year after. So 2.5 years, even if they delay a little bit due to some of these changes, it's between 2 years to 3 years. They have most of 2 to 2.5 years, their production programs are coming out. Most of them are horribly late. They are not sure about, they are facing some quality issues and etc. I think in that case, that's where as you know, KPIT as an independent software integrator, we have built platform, we have built technology, we have tools. And what we have done is we have built a very, very compelling story for them in terms of AI plus platforms plus our knowledge, what we have.
Yes.
And that is what we will be in a position to take.
No, sir, I was... Sir, please, my apologies for interrupting. Is just because we're so hard-pressed in time. I completely understand that. I mean, the solutions and the tools that the company has already built and the relationships. My question was more direct for the here and now. I mean, do you anticipate a disruption in deal flow or in revenues in Q1 and Q2 till this settles?
I don't think so. I mean, if you really look at OEMs, because they are in a hurry, they have to deliver. The point I was trying to say is they have to deliver the programs and they have to deliver in a different way. That's what they have to realize. So actually, all those actions, discussions are happening right now. So it is a question of a bit of a time. So the only point, if you ask me, also we are doing very well on the off-highway commercial part also. The only place where probably, if you may ask, is there is certainty will remain for some time, and which is a very, very small part of our business is tier 1 business. So I think that's what I would put it.
All right. Hi, Mr. Patil. Good morning and good to hear your thoughts. You know, your order book is quite good. The potential for business is very good. The only problem was you're not giving us a guidance. But as you said, in the next few months, hopefully we hear on that front. I wanted to focus on Europe. Europe, you know, you're doing at a run rate ballpark of around 75 odd. Then it went to around 80 and it continued to grow. But in the past quarter, there's been a bit of softness out there. It came down to around $77 million odd. What's the outlook out here? What is the run rate you should be looking at from the European business? And also the other positive has been the margins. I recall, Mr. Patil, over the years, you started at around mid-teens, it went to high teens, and now you're clocking 21%. Say in the next few years, where do you see this margin number headed? And in the near future as well, should we be counting on a 50 to 100 basis point increase in margins on a year-to-year basis?
I think I'll answer the first question. I think first, our goal is to see how we can help our clients, which are in a real pain. And I think this, the large pipeline we have, which we have mentioned, is The highest pipeline we have in our pipeline is from Europe. It is across the geographies, but the highest is from Europe. So I think that is something which will come back. I don't think, when we are already engaged, some of those projects have started, transitioning is happening. So that will happen, and you have seen some of the announcements. So I don't see a big issue on that part. On the margin side, I think we have worked very hard on this part, and we believe our current strategy would be to maintain the profitability. As you know that most of the OEMs, most of the service providers or technology companies globally have margin dilution during this quarter and last year. We have maintained that, but we believe that in the next year, our goal is to really reinvest into some of this problem solution fast, accelerate that, and AI transformation. So we will be making more investment in this area. So right now, I'm not sure whether we will be in a position to increase the margins from here.
But you can sustain at 21% for sure, right? That confidence you have.
Yeah, that's what we.
And in the next few years, you'll obviously look at improving from this 21% odd mark once growth comes back, once there are finalization of more deals.
We'll see where we are, and we have to see where the currencies are, and then we can take the view. Nobody nowadays in the world knows what happens tomorrow. So, yeah.
Indeed, Mr. Patil. We appreciate you joining in. I recall many quarters ago, you told us that 20% is possible and then 21%. Congrats on that front. The globe is a little bit uncertain, but you're giving a hint of optimism in the commentary that maybe things improve from here on. Appreciate you joining in and giving us all of those details.
Nigel, you know, the analyst at JP Morgan, Ankur Rudra, says that if KPIT were to do 10% growth in FY26, so how difficult is 10% in this environment? It's only the third company in their coverage universe which will do 10%, if KPIT does 10%. So I think that's essentially what Mr. Patil was talking about as well, that he began by saying, I mean, you should, in this environment, the way they're doing, actually has been very, very good. But of course, I mean, environment over the next 3-4 months, maybe clarity, then the guidance is restated. We'll see. We'll find out, as we heard from the company. Well, let's just quickly run through the market action as well. I think we've dipped quite a bit. We've come up a little bit, all in the space of the last 30 minutes or so. So what do we have, actually? The high today has been made on the Nifty at about 24,457. And the low, which was made about 10 minutes back, has been about 24,290. So I think we sort of dipped into the red by a little bit, and we are up about 50 points. It's a little volatile out there. Mitesh is back with us. Mitesh, what does one do?
Morning, so, you know, I was talking about this supply coming in closer to about 24,500. That's a pivot. So I think, you know, from a trading point of view, we carry index positions. I think good to take part profits off around those levels. I said ending in excess of 24,450 should avoid some profit. And reaffirm that. I think that's something to go for. Once we have a closing about 24,530, then I would look at 24,750 weighted zone as the next target. But for the timing, there's a good chance the next couple of days, maybe 3, 4, 5 days, could be spent within the trading time that you will see profit moving at or around levels of 24,450, 500. Having said that, I have a buy on L&T. I recommend to buy here with a stop just below today's low of 33.35 for targets of around 34.50 to begin with. And PNB Housing, you know, the stock is up significantly, but the way this breakout has taken place suggests we could have more in future. So we'll take a stop just around levels of 1,050 and look for a target from 1140.
1,200 was the high. 1,200 exactly was the high on the 12th of September last year. And from there, it kind of fell back. I was going to ask you that, but that's a call coming in from you, Mitesh. Thanks very much. Manisha is here with us to tell us what's happening as far as the commodity space is concerned. Manisha, morning.
Morning, Prashant. Thank you for that. I want to start with the crude oil prices because this is an area where you have seen the maximum price moves come in the overnight markets, and a lot of pressure as well continues. Overnight, we've seen nearly 2% of a decline come in for the crude oil prices. That makes it 3% down in the last week. Also, when you look at this current year, 2025, we are down by 14% for the crude oil prices. If you look at the last 12 months, then we're down by 25%. And it's not just about this year. When you look at the last couple of years as well, it has been a negative returns that the crude oil prices gave you. So 2024 was 3% down. 2023 was down 10% as well. So 2025 in that sense is a third straight year that you are looking at negative negative crude oil prices continuing. Having said that, we have been making lower lows because when you look at the average in 2023, crude averaged at $100 a barrel. Then it averaged at $80 a barrel in 2024. In this year, we haven't really been able to go to 80 at all. So we're averaging at around $68 to $70 a barrel when it comes to 2025. Well, various reasons which are putting pressure on prices. One clearly comes in from OPEC and allies, which are adding 411,000 barrels from the month of May. And OPEC has a meeting held on 5th of May. That is when they will decide on what they want to do with the month of June. An expectation is that they will be increasing production further for the month of June as well. Apart from that, there also is Russia adding to Asian inventories. We have discounted barrels coming in from various countries as well. The US shale output is at a near record of 13.5 million barrels per day. So there is no dearth of supply. OPEC is going to add to it. US shale output is near record highs. Then you have discounted barrels coming in from Iran and Russia. That is adding especially to the Asian inventories also, which has been pulling the Brent prices on the lower side. And then the markets also are looking at developments from US, Iran, and then Russia, Ukraine conversations. If this continues well, then you could be looking at more supplies coming in from here. The dollar index is strengthened from its 3-year lows. That is putting pressure on prices also. And then there is uncertainty when it comes to US and China trade conversations. That also seems to be weighing on. I also want to talk about various cautious sentiment that we have ahead of many data that is going to be deleted in this week itself. And then it is about the U.S. consumer confidence numbers that come in today. And tomorrow is a heavy day, by the way. You have the U.S. Job claims number coming in. It also is about the first quarter GDP numbers, pending home sales, and the Japan monetary policy meeting also gets released tomorrow. So a lot of data, 5-6 important data points that the markets will be reacting to.
Okay, all right, got it. Manisha, thank you very much for that. Let's move on to a couple of specific stocks which are in focus. And we've seen PNB Housing Finance be the high flyer this morning, almost 7-8% higher after reporting numbers yesterday. Let's ask Abhishek. Abhishek, what has worked for PNB Housing?
Well, across parameters, things have been pretty good for PNB Housing. Take a look at net interest margin. It's at 6-quarter high of 3.75% versus 3.7% in the previous quarter. The spreads have been at 2.2% versus 2.3% in the previous quarter. Asset quality has improved. Gross NPA ratio of 1.08% is perhaps one of the lowest in last 22 quarters. Disbursements momentum is stronger. Disbursements are up nearly 24% YOY and about 27.5% on a sequential basis. Even the tenure of the book has increased. Disbursements to AUM ratio has improved to 51.9% when compared to 39.3% in the previous quarter. AUM growth is strong at 12.85% YOY and 4.5% quarter-on-quarter. YOY, this is a 21-quarter high run rate that they have seen with respect to their AUM growth on a YOY basis. Back to you.
All right. Abhishek, thank you very much for that. 20 points is all that is left. So, I mean, the market's finding it difficult to sustain. But we've had such a phenomenal run yesterday and this morning earlier as well. 24,350 is where we are at.
Okay. I just want to take up one stock in particular, and that's TVS Motors. Now, at first glance, the numbers look really good for TVS. The profit is up 76%, revenue up 17% at a time when OEMs are struggling to grow. So why is the stock down there? I think the company has clarified in the conference call that the reason the margin shot up to 14% was because of the PLI benefit. So you have to sort of account for that. And X of PLI, our colleague Sud points out, the margin is at about 12.5%. It's still a growth, but you have to factor that in. And then it's saying that growth momentum in the domestic market may be like last year, first quarter could moderate. So the caution is that, maybe we have a bit of a speed bump on growth going forward. And that's the stock is taking cognizance of that. But back to more stocks. Oro Pharma in focus this morning. We have Ekta joining in with the latest. Ekta, good to connect on air again. And tell us more about Oro.
Thanks, Surbhi, for that. Well, Aurobindo Pharma, there is a little bit of news around that. What the company did notify to the exchanges is that there was a fire incident which occurred near their coal crusher area at their penicillin G facility, which is in Andhra Pradesh. There was the damage which took place was in fact limited to ancillary equipment, and the core manufacturing infrastructure was unaffected according to them. There were no injuries as well, and there is no material impact which is expected on the group's operations or financials. though the damage assessment is underway at this point in time, the facility is fully insured and the operations are temporarily paused, so they could see some amount of disruption for the next 20 to 25 days, and that's probably weighing on the stock at this point in time. But the company has indicated that as of now, there is no material impact and on the company's financials.
All right. Thanks very much, Ekta, for that. Just quickly take a look at the life insurance names as well, because our colleague Yash reported towards the end of the trade yesterday that the DFS secretary, Department of Financial Services secretary, in a meeting, and this is of course source-based, exclusive information, the DFS secretary told life insurers that no, the government will not take any action with regards to the bank assurance channel, essentially life insurance companies selling insurance products through the banking channel. Remember, I mean, for companies like HDFC Life, HDFC Bank is a large sort of channel through which it sells its policies. Same is the case with SBI, Max. I mean, actually for everyone, it is a pretty large, the degrees vary. And we'd been reporting, beginning late last year, starting with the finance minister, if you remember that comment which was made that bank assurance is a channel, probably a little problematic and banks need to reduce the dependence. Then, of course, IRDA got into the action. So what we put out yesterday is a bit of a reversal to that entire sort of news flow. And if you looked at the insurance sector coming into this year, this is one of the big regulatory changes, action or otherwise, was a big thing which many investors were waiting and watching. And that story yesterday clarifying that, I mean, that's not what the government wants to do. They recognize the importance of the channel, the bank assurance channel, but at the same time, I mean, they are asking insurers to be cognizant of mis-selling, etc. So even as the bank assurance channel expands, it should not result in increase in mis-selling, cases of mis-selling, etc. The industry needs to keep a lid on that as well. So just wanted to kind of sort of highlight once again what we put out yesterday. What we'll do is we'll take a quick commercial break here. We're going to come back. It's our special segment. It's the economy. Lata in conversation with MPC member Saugata Bhattacharya on the state of the Indian economy. Stay tuned.